would not see this as a disadvantage or a detriment to the availability of financing.
So would you require hedging?
Absolutely, but I mean quite the opposite. I mean, you know, in every credit committee that we run on a retail scheme in Poland and the Czech Republic, one of the questions that is being asked consistently is what about the currency risk? And it's not good enough to say that, you know, we don't have a currency risk because the leases are in euro and the loans in euro, because it's obviously somebody is carrying the currency risk, and it's the tenants. So you do your analysis where you say, you know, assuming a 20% devaluation of the zloty, how would that result in a rent-to-turnover ratio? How would the rent-to-turnover ratio change, and the affordability of the tenants, etc.? So you do your analysis already on that basis. If a substantial portion of the rent was in local currency, and we could therefore eliminate that portion of the currency risk on the tenant side and just cover it with a cross-currency swap or the likes, I think it would be regarded as a plus rather than a minus.
What about the cap rate, Mike?
I mean, most investors obviously naturally prefer the euro-denominated lease, and the yield would reflect. If there's a PLN leases, a lot of investors won't even touch it. Many of them don't touch it because they have the fear of the PLN lease, but also normally there is more of an issue. They expect more of an issue in financing. In terms of an actual amount, an impact in terms of how many basis points, I think it would be small, but it would depend on how many of the leases were actually denominated in PLN and how many were in euro.
But I think that the risk is also more on the fashion tenants, because for the food anchors, the risk is mostly focused on the food anchors now, because they want to negotiate everything in PLN. But in terms of business and turnover, the risk is more focused on the fashion tenants, because they are producing abroad, and also for the construction cost. But the construction cost, it's kind of balanced. Sometimes when the PLN is strong and the euro, it's so everything is covered. But for this issue, it's mainly focused on the negotiation with Tesco, because for another tenants, they agree to negotiate in euro.
Yes, go ahead.
Walter, just a question on the swap. So how much the cost of financing can increase because of the hedge instruments that you just mentioned?
Well, I mean, I think the actual cost of the swap is probably negligible, maybe 10, 20 basis points. But I think it's more a question about, you know, what the base rate is in zloty compared to euro. Because obviously you'll be basing, say, I don't know, a third or 25% of your financing cost with a different base rate. But the actual margin would probably be similar, and then there's an extra maybe 10, 15, 20 basis points on the swap. But it's not, I don't think it's substantial. And to an extent, I mean, you know, it's a historical anomaly that we've got euro rates in these countries. I mean, you know, nobody in Sweden would consider signing euro leases, would he? Or in Denmark, or in Switzerland, or indeed in the UK. You know, you have a tradable, stabilized, fully convertible local currency, and it has been the case for the Czech crown and the zloty for the last 15 years. So there's actually no fundamental reason why leases should be in euro in this country. It just has developed like that, and it has been driven by the fact that, as it has been said, we are basically seeing mostly cross-border investment rather than local investment. But I would take the view that over time, we clearly see, for example, Polish insurance companies now starting to invest Polish insurance money, and that is clearly in zloty. That therefore there should be more demand for local currency leases and local currency products. So I'm not sure that this sort of attitude that you know, if it's a lease different than euro, there's a premium, that it will continue over time. But I mean, that obviously remains to be seen over the next 10 years.
We remember that you have US investors, yes, and they have to hedge against euros as well as against PLN. So
exactly. Or in the case of Daniel's fund, I mean, you invest in the UK, so you've got
we're a euro fund. So
Euro fund. So if you invest in the UK, you've got the same product.
The only country we hedge in is the UK. We have to hedge the sterling.
So if you hedge the sterling, you can equally hedge the zloty. There's no fundamental difference, is there?
Yeah. So from our point of view, obviously we have to bear in mind the risks. We're investing in Poland and Czech. It's a euro-denominated transaction, so we don't have to hedge it. But we do have to consider the underlying risk, particularly at retail.